turnaround story. And the quote that really struck me in the memo to clients, everyone was focused on the liquidity and the critical moment. The part that struck me is the metaphor the CEO uses, is that Credit Suisse is looking to rise like a phoenix. That's from the ashes.
Hi everyone, welcome to Token Topics. Is XRP about to rise like a phoenix? Many in the community seem to think so. As the world faces a monetary disaster, XRP is primed and ready to assist. Please watch the video all the way to the end. We're going to dive into a statement made by the Credit Suisse CEO and look into what's going on with Wall Street, the world, and the XRP community. Please hit the like, share, and subscribe. With that out of the way, let's go ahead and dive in. Don't forget to purchase that hardware wallet to keep that crypto safe. Especially if you're a mobile user, DCENT is perfect for you. A biometric hardware wallet is on sale through Token Topics. You can see it's marked down from $159. It's only $129 through the affiliate link. I recommend the 2-package deal. You get a better deal. It's marked from $318 down to only $219. And if you're unsure if purchasing through YouTube through an affiliate link is safe, go ahead, go to the DCENT store, the official website, and go ahead and ask down here with any technical questions or any questions about the affiliate links, and they will answer you. I'm going to put the affiliate links in the description below. As you saw from that first clip, the CEO of Credit Suisse says that the bank is going to rise from the ashes like a phoenix. We have heard that term before. XRP holders are no stranger to that term. Why is the CEO so confident? Despite receiving backlash about liquidity and other issues and a concern about what's going on with the bank, he seems to be pretty confident of what the future holds. I really don't think there was a coincidence that he used that term despite that they're having a bunch of issues. Ripple has been working with Credit Suisse quietly behind the scenes for some time. I'm pretty sure the reason why that CEO is confident is because, partially, of this. In a new 135-page report, Credit Suisse offers their research and expertise on blockchain, declaring that it will fundamentally change every aspect of banking and finance in the next 10 years. Keep in mind, this is in 2016. Furthermore, the report comes to the same conclusion as Ripple on the question of where these shifts will occur. First, have the most significant impact on cross-border payments. Boom! Using Ripple as an example of a platform that could enable not only cost-cutting, but also increase revenues. Credit Suisse cited McKinsey affirming the cross-border payments as one of the most potentially valuable applications of distributed ledger technology. I'd like to play the full video.
Suisse, more turbulence, fresh market turmoil. Friday, we get the new CEO coming out, trying to attempt to reassure investors, and to a certain extent, investors. Don't look at the share price. Worry, think more about what is happening from a sort of stability point of view. That is where our strength ultimately lies. But it backfired. The market, investors, employees didn't necessarily read it that way. But actually, did he have a point? And I think that's the question I think we need to step back and think about here. Sonali Basak joins us to try and assess what is happening here. Communication is key at these critical junctures, Sonali. Was that just bad communication, or is this a bad story underlying what we're watching here?
It's a good question, because for Credit Suisse, we know that these issues have existed, and not only existed, but exacerbating, because you're seeing them in this vicious cycle of rising funding costs as well as deteriorating revenue. The question of whether a capital raise looms near and how they really fill that gap with asset sales is still a big question. But let's talk real quickly, as you say, about what happened over the weekend, because you saw the stock fall to a record low. You are seeing ADRs now rising in the U.S. session as some of these fears are being assuaded. But I think also you look at what Boaz Weinstein just said about an hour ago on Twitter. He says the European bank sub-CDS is a good catch-all tail hedge for the myriad of problems swirling around. So you have Credit Suisse caught up in this grand macro story now, which puts it in a really difficult and interesting position compared to where you saw, for example, Deutsche Bank in 2016, where the market was really freaked out about the CDS widening and what would happen to the bank in the longer term. Now, I did ask another investor another issue. I said, you know, are you really worried? This is a longtime banking investor, about whether he's worried about Credit Suisse in the long term. What he told me is no, and I said, is that because they're a diamond of Switzerland, or because you think that they can operationally turn around this story? And he said it's the former, not the latter. They are a diamond of Switzerland. This is a massive bank, one of, you know, two, as we always talk about, that Switzerland is really worried about, that since after 2008, of course, the regulators have kept a close eye. This is not a bank that is made to fail for Switzerland. So again, their capital buffers, as the CEO was saying, the point, Guy, that you say that he is really hitting home here is they're not in this liquidity crunch now at all. And in fact, their capital ratios are in their planned range for the year. And as Marian Halftermeyer of Bloomberg points out as well, those capital ratios are actually higher than where Deutsche Bank had them back in 2016, where we saw that really big market issue.
And that's a really good point. And I also think that the whole idea of the too big to fail is real. They don't want a repeat of Lehman and all that. Nonetheless, where is the counterparty risk? Like, if something, Credit Suisse may be around, no problem, but there may be a lot of turmoil in the meantime. Where is the contagion risk for that?
That's a great question, because you have clients on multiple sides of the equation here. And if you look at any trading client, for example, we know that many trading clients since Archegos have started to diversify their base here. They've started to move to banks with higher credit ratings, American banks, and we've seen that even float through for many, many quarters now in the trading numbers. The investment bank, which is under a big strategic question today, I think that's also interesting to see whether clients will stay or go based on worries about larger systemic issues down the road. But listen, just for Credit Suisse alone, what happens now is we already knew this would be a long turnaround story. The costs they'll have to face in the near term will make it an even longer turnaround story. And the quote that really struck me in the memo to clients, everyone was focused on the liquidity and the critical moment. The part that struck me is the metaphor the CEO uses, is that Credit Suisse is looking to rise like a phoenix. That's from the ashes. And so you're looking at the CEO acknowledging to his employees that this is not an easy task by any means, but it's something he's trying to rally the troops around and is asking them to get along for the ride.
You could see that rising like a phoenix is no stranger to the XRP community. They know what that term means. There's merchandise for sale. People are tweeting about it. It's all over social media. That term has been used quite a bit in the XRP community. Everything from people's Twitter accounts. You can see right there XRP Phoenix, Ripple Riddler. He tweeted out, XRP will rise from the ashes. This is an older tweet, so this is no stranger to the community. Let's not forget that XRP was going to be used on-demand liquidity for the world's liquidity crisis, which we're facing a crunch. As the world is facing further downturn, you can see this article, Wall Street extends its worst run since the financial crisis. That would be referring to the financial crisis of 2008. That's very significant. If you've seen one of my recent videos, I spoke on the British pound that just collapsed, which is another domino piece. If you add all these things together, it is not looking good at all. But don't forget, we're holding the solution. Just want to go over this briefly. To calm markets, Bank of England will buy bonds on whatever scale is necessary. Bonds are typically a safe haven where investors in the stock market, they would put their money they would roll it into bonds. The fact that the bond market is not doing well at all and the banks are trying to prop it up by buying up the bonds is a very bad sign. Not only that, but amongst everything else that is looming with the rapid inflation, China dumping the dollar, Russia creating its own reserve with BRICS. There's a lot of craziness in the world right now. So they will need a liquidity solution in the near future.
Leaning in and using our tools to solve a payments problem. And this payments problem is measured truly in the trillions of dollars. So while we're on kind of, mile marker 1 of a 26-mile marathon, we're definitely past the starting line.
Thanks for that. Yeah, so Brad had some interesting things to say, and I thought it was really important to break down what he's talking about and what the opportunity, at least that Brad sees, and I think ultimately could be the bull case for Ripple. So let's break it down. Talking about the size of the payment markets, according to McKinsey, it's about $155 trillion is the size of the market. So your total addressable market is massive. Right now, if you take a look at what it costs to move $155 trillion, it's about $31 billion, roughly around 20 basis points is what it's costing you. So if using Ripple, and this is from Ripple stats, you could save about, according to them, about 60%. Well, how do they do that? So you use the Ripple ledger plus the Ripple currency. And that's the key to this 60% right here. The reason why using the Ripple currency, if people start doing this, is good for is the way you save is because right now banks have to hold foreign currency everywhere in the world. They're called Nostro accounts. It's very cost intensive to have that inventory around the world. They can simply replace that foreign currency with XRP and they can save a lot of money on that.
As we see these markets failing, we're seeing the dump of the dollar. We know that we are holding the solution to this world crisis. Before I end, I'd like to play a fun clip. This is from the Working Money channel, connecting some dots with Ripple, XRP, the Rothschilds, also an Economist cover magazine.
David Schwartz was working with the NSA in the early part of the century, way before Bitcoin was even unleashed to the public. But back as far as the late 1980s, as we know, David Schwartz came up with distributed ledger technology. The Rothschilds are part owners in The Economist, which in 1988 released this article talking about a new world reserve currency potentially replacing the US dollar. And we know the Rothschilds are indeed invested in XRP. Very, very interesting. And I know some of you guys already know all this stuff. But here we go, guys, the phoenix rising out of the ashes. And for those of you guys not know what that means, maybe English isn't your first language. To rise like a phoenix from the ashes means to emerge from a catastrophe stronger, smarter, and more powerful. An example of rising like a phoenix from the ashes is someone who opens a new successful business after his previous business has failed.
One more clip. This is from Michael Cowan on the crisis that we are facing.
But if it flap and smokes, everyone, a major bank is on verge of collapse. And guess what? If this bank goes down, all the deposits will be bailed in, aka they will be taken. I've been putting out urgent warnings this month that the banks are in big trouble and we're at the risk of a financial crisis like 2008, but much worse this time because the bubble is much bigger. I've been warning that your money is in danger and it is not safe in the banks anymore. With the Dodd-Frank Wall Street Reform and Consumer Act, banks, when they go down, when they start to fail, they can legally bail in your deposits and give you worthless shares. While people with currencies around the world crashing like the Japanese yen, Chinese yuan, the British pound, Australian dollar, with the bond market nearly collapsing in the UK, if that wasn't warning enough for you, well, we just got another huge critical warning. So what big banking institution is in trouble? Well, everyone, that's exactly what we're going to go over in today's video. Look at this, everyone. This is a huge developing story right now. Credit Suisse shares tanked 10%. This is huge, everyone. And a week ago, I put out a video saying we only have 7 days left. And I said in that video, I think during the following week, we're going to see a beginning of a Lehman-like moment. The UK, with what happened with the pound crashing, with the bond market crashing in the UK, and with the currencies collapsing around the world. And now we just got this news literally 7 days later after I posted that video, the Credit Suisse could be on the verge of going under, especially in the US.
Crazy times we're in. I guess we'll have to see what happens next and see what happens with the dollar here soon. Let's not forget that the Federal Reserve held a very important meeting behind closed doors. Today, stay tuned for future updates on that. That's all I have for the video. I want to say thank you so much for watching another edition of Token Topics. Please do hit the like, share, and subscribe for future content. Go ahead and comment your thoughts and opinions down below. Stay safe out there.